Good morning, this is Giuseppe Basile. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @Fibstalker nickname. Good morning, today is January the 14th, 2013, and it's 1 p.m. Italian time. This video is part of my newsletter of yesterday, Sunday, January 13th, which I'm going to send with 1 day of delay. This video is the Fibstalker view on currencies. In this video, I review for my subscribers the dollar index, and for forex pairs, those with the highest volume, and after the euro dollar, and then and these are the pound versus the US dollar, the Australian dollar versus the US dollar, the US dollar versus the Canadian dollar, and US dollar versus the Japanese yen. I typically publish this video on my blog with 6 to 8 days delay, so if you want to watch this video that very often, like it does today, offer setups for the pairs I've just mentioned, you can just subscribe my newsletter for free on FibonacciStalking.com. On the left side there is an icon. It takes only 10 seconds and you can get this and much more information for free. Thank you for following. Let's start from the dollar index. What you see on the screen is the daily chart of the dollar index, and those who follow me know that we were able to identify a level of resistance in the last few weeks and months, and this level of resistance and short setup came at 84 area in July. At the same time, the euro put its lows after Draghi speaks that he would do anything necessary to keep the euro area alive. And in November we also identified this 81.60 area of resistance, and the dollar started moving lower, even though it had these huge spikes higher. And in at the beginning, on the 20th of December, I've also indicated that the dollar could be preparing for a move higher, and that's what happened. I was not expecting such a huge move, but eventually the price of the dollar stopped, and it stopped in correspondence of previous orders here. If we take this retracement showing resistance at 80-90 area, we can see that the first time when the price started coming down from the 81.60 level, the price was never able to get to this 80-90 area. So here on the November 29 we had the high, and this high was 80-60-76, never came to 80-90 area. So it means that there were orders here in this 80-90 area that were not filled initially, then they were filled later on December the 8th, and again on January the 5th, and that's where we saw this high in the dollar. So I believe the dollar resumed its move lower, and its move lower will bring it into the 77.50 or 60 area here initially, and price will should then continue lower into this 75.40 area, and that's where we should see then a rally for the dollar index. Moving to the pound versus the US dollar, what you see on the screen is the weekly chart, and we know that we have this long-term support area that can be traced from these two levels here. It was not respected in 2010, but then it started being respected at the end of 2011, and then again at the beginning of 2012 and mid of 2012. So where this pair is going, actually, if we look at this setup, this pair has a potential target in 178.70 area. If this seems too extreme. Actually, if the dollar will keep showing weakness, that's possible. Going on the daily, the picture on the daily is a little bit skewed by the behavior of the dollar in the last few weeks. So we had this support level here, and that's something which is in place. So if should price come back to 158.50 area, this area should act as a support. And initially we also had identified this level of support in the 160.70 area, which was actually respected on the December 27th. Then we had this spike higher. The behavior in the dollar skewed the picture here. So price is now back to this level of support. So it's very possible that this level is going to act as a support now, and actually I think it's possible to take a position here right at the current price in the 160.80 area with a very aggressive stop just below this level. So let's say at 160.50. Otherwise we can put our stop below 160 area here, and I believe this is a very good setup that you could take advantage of. Moving to the Australian dollar versus the US dollar, again what you see on the screen is the weekly chart. We know that on this weekly chart we have a very clear long setup. Price is moving in this huge sideways action, and as you can see, price started moving above. So this 0.9580 area of support has the potential to bring price into the 117.90 area here, and that's what is actually happening. On a shorter daily time frame, we can see support here, and this support can also be seen on the weekly chart here, and this is the trace with a support in the 103.60 area. Let's move to the daily and study this in a little bit more detail here. So the daily setup I've just mentioned is can be traced like this. There is support here, but what is interesting is the support from lows in October to highs in December, and we have support in the 103.60 area here. And where price is going, price is as a target in the 106.80 area. So keep that in mind. With renewed dollar weakness, that's where this pair is going. So if we want to analyze the sequence of measured move on the shorter time frame, we can see this trace here that failed, but then eventually brought price into the target at 105.70 area. And if we trace the next measured move, not considering the break here, we can see that it worked to the pip, and that's where we have support at the moment. Support comes at 105.20 area and has a target into the 106.30 area. So it's possible to take a position here with a stop below the 104.90 here, even if it's a little bit late here. But should price come back, you can definitely take a long here, or also take a partial long here with a stop below 104.90. Moving to the US dollar versus the Canadian dollar, on the weekly we have this short resistance, which corresponds to a short that is going to bring price into the 0.9540 area for the dollar against the Canadian dollar. And on the daily chart, in the past we showed this resistance level, and which was also a short It was briefly violated here, but the resistance came at 0.99 for the area, which is going to bring price into the 0.9780 area here. On a shorter time frame, we can see the, again, similarly to what happened to the Australian dollar, we can see this trace here, and we can see this trace, and it has target in 0.9810 area here, and that target was not touched just yet. Now when price comes there, gets there, it could continue lower into the 0.9760, or it could retrace, in which case we are going to use this this trace here. So keep this trace in mind. The next opportunity could come only after we touch 0.9810. It could come with a short at 0.9840 area here, bringing price into 0.9880. And finally, the US versus Japanese yen here, we saw this huge move higher. We were not expecting this move higher. The reason why we got this move higher of the US dollar versus Japanese yen is that clearly the Japanese central bank is inflating the Japanese yen at a higher speed than what the Fed is doing for the dollar. But eventually this huge move here is coming to is becoming gold, so it will probably pause here, and we need to keep in mind this trace here. That's a very important. So at current highs, if we don't get higher highs here, the 86.90 area, 87 could act as a support if price comes back to it. So let's give a look to the sequence of measure move we had on this pair. I've been studying this pair and proposing setups. A lot of those setups worked to the pip, so congratulations if you took the opportunity and you took the trade. So we had a sequence of measure move. 83.80 was a support, and after hitting the second target in 85.70 area, we had this next measure move here, and as you can see, again we got support at 85.70, bringing price into 87.10 and 87.80. Then something strange happened, and that was related to the behavior of the dollar as well, because a traditional traded here with a support in the 87 area, and this brought price into the 89 target, and we have another target here. I'm not sure we're going to get there, but definitely if price does not hold in the next measure move here in the 88.25, bringing price into 90.40, then we will need to consider this new measure move, in which we have the 87 as a support. So this is going to be the 87.92. Below it, I think we trade 86.87. So I hope this is useful, and if you want to receive this information timely, just subscribe my newsletter. Go to FibonacciStalking.com. I'll be very happy to share this information with you timely and for free. Thank you very much for your attention. I wish you a very good trading week, and I look forward to see you on my blog. Bye bye.